While United States are still debating over legal clarity and framework for digital assets, Ripple is conquering continent on the other side of the world, Asia. Today we will explore and explain 3 amazing updates that happened in Japan and Korea. SBI Remit and Tottori Bank have now launched a new international remittance partnership in Japan. The service began on April 20th, 2026, after both companies announced the cooperation a few days earlier. At first glance, this may sound like another routine banking partnership, but for Ripple and XRP, the details matter because SBI Remit is not just any remittance provider. It is one of Ripple's longest-running partners in Japan, and it has already used Ripple's technology, including XRP, in certain payment corridors for international money transfers. Tottori Bank is working with SBI Remit to give customers access to overseas remittance services. The bank itself is not directly operating the transfer system. Instead, it is referring customers to SBI Remit's service. SBI Remit handles the actual remittance process, while Tottori Bank becomes a local access point for people who need to send money abroad. This is not the same as saying Tottori Bank has built its own XRP-based remittance network. It has not announced that. What it has announced is a business partnership with SBI Remit, a company that already has deep experience in international money transfers and a long relationship with Ripple. The reason this story matters is because remittances are one of the clearest real-world use cases for blockchain-based payments. A remittance is simply money sent from one country to another, often by workers sending part of their income back home to family. These payments are extremely important in many parts of the world, but traditional remittance systems can be slow, expensive, and operationally complicated. Money may pass through several intermediaries before it reaches the recipient, and each step can add cost, delay, and friction. This is where Ripple's payment infrastructure has always tried to position itself. The basic idea is to make cross-border payments faster and more efficient by using modern settlement rails instead of relying entirely on the older correspondent banking model. In the traditional model, banks often need relationships with multiple other banks, and money may move through a chain before it arrives. In some cases, institutions also need pre-funded accounts in destination countries. That means capital sits idle just to make future payments possible. Ripple's technology was designed to reduce some of that friction. In certain models, XRP can also be used as a bridge currency. A bridge currency is an asset that helps connect two currencies when direct liquidity between them is weak or expensive. For example, instead of needing a direct market between currency A and currency B, the system can briefly move through XRP as the middle asset. The goal is to use XRP as a temporary settlement tool that helps money move from one side of the transaction to the other. But don't get too excited, because the official Tottori Bank announcement does not clearly say that every transfer under this new partnership will use XRP. SBI Remit has previously used Ripple's technology, and it has announced XRP-based remittance expansion in corridors involving the Philippines, Vietnam, and Indonesia. That gives the XRP connection a real foundation, but it does not automatically prove that this specific Tottori Bank arrangement makes XRP the settlement asset for every transaction. Even with that in mind, the adoption signal is still meaningful. Tottori Bank is a regional bank, and regional bank partnerships matter because they connect new technology to real customers. In this case, the service appears especially relevant for foreign workers in Tottori Prefecture, who need easier ways to send money overseas. Japan, like many developed economies, faces labor shortages in certain sectors, and foreign workers can become an important part of the local economy. When those workers need to send money back to their home countries, demand for reliable remittance services grows. Adoption does not always arrive as one giant announcement from a global bank. Sometimes it grows through smaller integrations, local partnerships, app-based services, regional bank access points, and specific payment corridors. These steps may not immediately transform XRP's market price, but they help build the infrastructure around real usage. For Ripple, Japan has always been one of its most important markets in Asia. SBI Group has been closely linked to Ripple for years, and SBI Remit has already been part of Ripple-related payment initiatives. That makes this new partnership another sign that Ripple-linked infrastructure remains active in Japan's financial system. It also shows that the use case Ripple has focused on for years, faster and cheaper cross-border payments, continues to have institutional relevance. The market implication is more complicated. XRP investors often react positively to news that connects XRP with real-world payments, especially when the news involves banks, remittances, or regulated financial institutions. That reaction is understandable because XRP's long-term value case has always depended partly on whether it can be used beyond exchange trading. A live remittance service is much more relevant than a vague partnership announcement with no payment function. All right, let us now shift our focus to South Korea. South Korea has become one of the more important markets to watch in digital assets, not only because of retail crypto trading, but because its financial institutions are now testing how blockchain infrastructure could fit into regulated banking. A recent example comes from Kbank, South Korea's first internet-only bank, which has entered a partnership with Ripple to test blockchain-based overseas remittance technology. The important point is that this is not being presented as a fully launched public remittance product. It is a proof of concept. In simple terms, a proof of concept is a controlled test used to see whether a technology can work before it becomes a real customer-facing service. That distinction matters because crypto headlines often turn early tests into something much larger than they actually are. In this case, Kbank is testing the technology, not announcing that every customer can now send international payments through Ripple rails. The test is still significant because of who is involved and what is being tested. Kbank is not a random financial startup. It is a regulated digital bank in South Korea and is closely connected to the country's digital asset market through its banking relationship with major crypto exchanges, including Upbit. That gives the partnership more weight because Kbank already operates near the intersection of traditional banking and digital asset infrastructure. The project is focused on overseas remittances, which means sending money from one country to another. This is one of the areas where blockchain payment systems have a practical use case. Traditional cross-border payments can involve several intermediaries, different banking systems, delays, compliance checks, and extra costs. For ordinary users, that can mean slower transfers and higher fees. For banks, it can mean operational complexity and a need to manage liquidity across multiple markets. Ripple has spent years positioning its technology around this exact problem. The basic argument is that blockchain-based rails can help move value faster with clearer tracking and more efficient settlement. In some Ripple payment models, XRP can act as a bridge asset between currencies. A bridge asset is a temporary middle asset used to connect two currencies when direct liquidity is limited or expensive. However, the current Kbank partnership should not be described as confirmed XRP usage. The official material around the partnership emphasizes Ripple infrastructure, custody, wallet technology, and stablecoin-based remittance capabilities. It does not clearly state that XRP is being used as a settlement asset in the test. Ripple partnerships are relevant to XRP because XRP's strongest utility case is cross-border settlement. But Ripple infrastructure and XRP usage are not automatically the same thing. A bank can use Ripple's custody or wallet technology without necessarily using XRP in every transaction. And if you ask me, this is the exact thing confusing most of you when you hear some bullish developments which are not followed by price movement. That is because most of the media, especially YouTube channels, present every development like it's life-changing for XRP, when in reality, most of the developments are not directly tied to XRP, but to company or technology around it. Another important part of this partnership is the role of custody and wallet infrastructure. Banks cannot simply use blockchain technology the way an individual uses a crypto wallet. They need secure systems for managing keys, approving transactions, controlling access, and meeting compliance standards. Ripple's custody infrastructure, strengthened by its acquisition of Palisade, is designed to support that institutional layer. This means the partnership is not only about moving money. It is also about whether a regulated bank can safely manage digital asset operations inside its existing systems. Institutional adoption often depends less on the asset itself and more on the supporting infrastructure around it. Banks need security, auditability, internal controls, regulatory comfort, and reliable transaction processing. Without that foundation, even a fast payment network is difficult to use at scale. For XRP, the market implication is constructive but indirect. News like this can support sentiment because it shows Ripple continuing to work with regulated financial institutions in Asia. It also keeps the cross-border payment narrative alive, which is central to XRP's broader utility case. But it does not automatically create XRP demand. Direct price relevance would depend on whether Kbank eventually launches a live service, whether XRP is confirmed as part of the settlement process, how much volume moves through the corridors, and whether that activity requires real XRP liquidity. However, price impact depends on more than the existence of a partnership. What matters is transaction volume, how often XRP is actually used, which corridors use it, how liquidity is sourced, and whether the activity creates open market demand. If XRP is only used briefly as a bridge asset, the important question becomes scale. Small transaction volumes may prove the technology works, but they may not be large enough to materially affect market price. Large, repeated, high liquidity usage would matter more. That is why this development should be viewed as constructive, but not as a guarantee of price movement. It supports the broader adoption narrative around XRP. It strengthens the idea that Ripple's payment technology still has real institutional use in Asia. It may also increase confidence among investors who want to see XRP connected to practical settlement activity rather than only speculation. There is also a broader regulatory and institutional angle. Japan has generally taken a more structured approach to digital assets than many other markets. When Ripple linked services operate inside a market like Japan, the compliance environment matters. Financial institutions care about anti-money laundering controls, customer verification, operational reliability, and clear responsibilities between service providers. SBI Remit's role is important because it already operates as a regulated remittance provider, which makes the service easier for banks and customers to access. This is also why the story should not be framed only as a challenge to SWIFT. It may offer an alternative for certain remittance flows, especially smaller consumer transfers where speed and cost matter. But that is different from saying it replaces SWIFT across the banking system. SWIFT remains deeply embedded in global finance. Ripple-related payment infrastructure competes more directly in specific areas where faster settlement, lower fees, and better liquidity management can create an advantage. All right, we have one more development to cover today, so let's travel back to Japan. SBI Ripple Asia has completed a new token issuance platform built around the XRP Ledger. And this is one of the biggest XRP Ledger adoption stories coming out of Japan, because it connects the XRP Ledger to a regulated payment category inside Japan's financial system. The platform is designed for tokenized, prepaid payment instruments. That means businesses can issue digital prepaid value on the XRP Ledger. This could be used for things like gift cards, loyalty rewards, regional payment systems, tourism programs, or merchant networks where customers hold a prepaid balance and spend it inside a defined ecosystem. This is different from launching a normal cryptocurrency. It represents value that can be used for payment or redemption in a specific commercial setting. That is why the regulatory part of the announcement is important. SBI Ripple Asia completed registration as a third-party prepaid payment instrument issuer under Japan's payment framework. That gives the platform a legal structure for issuing prepaid value that can be used across participating businesses, rather than only inside one company's own store or app. Let's use some real examples to explain better. If a coffee shop creates its own closed rewards points, that is one thing. But if a company issues prepaid value that can move across a wider network of merchants, regulators usually care much more. The system needs rules around issuance, redemption, custody, record keeping, consumer protection, and who is responsible if something goes wrong. SBI Ripple Asia is positioning this platform inside that regulated category, which makes it more relevant for real commercial use. The role of the XRP ledger is also important. XRPL is not only a network for sending XRP, it can also support issued tokens, meaning assets that represent something else, such as a currency, a claim, a voucher, or a prepaid balance. In this case, the focus appears to be prepaid payment instruments, not direct consumer spending with XRP. That is an important clarification. A person using one of these services may not be buying XRP or paying with XRP directly. The customer may simply see a balance inside an app, while the ledger handles the token movement behind the scenes. So this story is positive for the XRP ecosystem, but not in the exaggerated way some headlines may suggest. Real development is that SBI Ripple Asia built XRPL-based infrastructure for regulated token issuance. Speculative part is whether this creates major direct demand for XRP itself. Every transaction on the XRP ledger requires a small amount of XRP for fees, but those fees are intentionally very low. So even if transaction volume increases, that does not automatically translate into large XRP buying pressure from fees alone. The more important long-term implication is infrastructure adoption. If businesses can issue compliant prepaid tokens through SBI Ripple Asia, XRPL becomes part of a real payment and loyalty environment. That can make the ledger more useful, more visible to institutions, and more credible as a settlement and tokenization network. Institutional adoption often starts this way. It does not always begin with banks or corporations buying large amounts of a digital asset. It often begins with regulated infrastructure that solves a narrow problem and fits into existing business systems. And if these developments continue to expand, demand will follow naturally. Another practical detail is how businesses may connect to the platform. The system is designed so companies can integrate through APIs, which are software connections that allow one system to communicate with another. That matters because merchants and service providers usually do not want to rebuild their entire app or payment system just to use blockchain. If blockchain functionality can be added behind the scenes, adoption becomes more realistic. The customer experience can stay familiar while the ledger performs a settlement or token transfer function in the background. This is especially relevant for use cases like tourism, regional commerce, and local incentive programs. Japan has many regional economies that are trying to attract visitors, support local merchants, and create smoother payment experiences. A tokenized prepaid system could allow a tourism operator, local government partner, or merchant group to issue digital value that works across hotels, restaurants, shops, and services. For Ripple and SBI, the story also fits a broader pattern. SBI Group has been one of Ripple's most important partners in Asia for years. SBI Ripple Asia was created as a joint venture to push Ripple-related technology into Asian financial markets, and Japan has often been one of the more structured environments for digital asset experimentation. This platform adds another layer to that relationship. It is not only about remittances or exchange trading. It is about using XRPL as infrastructure for regulated tokenized value. From an XRP price perspective, the conclusion should stay measured. This news can support sentiment because it shows that the XRP ledger is being used for a serious, regulated commercial platform. Investors often look for evidence that XRP and XRPL have utility beyond speculation, and this announcement helps that argument. But price does not move sustainably just because a platform exists. The real questions are whether businesses adopt it, whether consumers use it, how many transactions take place, and whether the platform expands beyond early use cases. And that brings us to the end of today's video. You now understand why these 3 updates from Japan and South Korea matter for Ripple, XRP, and the broader future of regulated blockchain payments in Asia. If you want to keep learning, make sure to watch one of the 2 videos that just appeared on your screen. Also, subscribe to the channel, like the video, and let me know in the comments which of these updates you think is the most important. Thank you for watching, and I will see you in the next one.